Hi, welcome back to another edition of Lipper's Fund Flows Insight. My name is Tom Roseen. Thanks for joining me today. I'll be reporting flows for the weekend of Wednesday, October 25th, 2017. Conventional fund business took in about $4.3 billion this week. It's the third consecutive week they've seen net inflows. And basically we had some pretty strong market. We had Q3 earnings reports that were better than expected, and it's actually been a pretty good earnings season with something in the 234 range of the S&P 500 constituents reporting. About 74% have actually beaten analyst estimates for earnings this season, and a little bit less for actual revenues. But again, it's been really, really strong numbers overall. And basically this week we heard the story kind of record highs, good Q3 earnings as well. And when I say record highs, I mean the Dow, the S&P, and the NASDAQ all hit record highs this week at least twice. One of them actually hit it 3 times. And then I think part of that was on two bits of news. First of all, the Senate passed their blueprint for the budget for fiscal 2018, which everybody saw as a stepping stone in order to do the tax reform that President Trump has been asking for. And then also we saw that Shinzo Abe, the Prime Minister, basically his coalition took a majority this weekend on Sunday, basically ensuring his plans will continue on. That was seen as a big plus for stocks on the Japanese market. So that was kind of the big thing for the week. On the last trading day actually of the week, though, we saw that AMD and also Chipotle did very poorly, and we saw one of the largest decreases, one-day decreases in the stock market in about 7 weeks. But nonetheless, the numbers were pretty good. Let's go ahead and start turning our attention back towards mutual funds and see how that impacted mutual fund behavior. Basically, when we take a look at the flows of our equity macro group, we see that we saw about $417 million in outflow. Not a big number, and the split will be pretty typical, but basically we saw, again, domestic losing and non-domestic winning. But basically on the taxable bond fund side, we saw about $1.5 billion enter the market there, and that is despite actually having the 10-year yield jump to 2.44%. It's the highest yield that we've seen since about March 21st of this year. So that was a big number, but we still saw inflows about $1.5 billion. And when we take a look at muni bond funds, we saw about $111 million inflows. That number is a little bit suspect. I'll talk more about that later. And money market funds saw about $3.1 billion in net new money come into that group. Well, now let's take a focused look at equity funds. When we take a look at this group, we basically saw they had a decline of about 0.46%. Again, we had a mixed market. We actually saw a piece where the Dow was doing well, but then you took out the Russell and the S&P, and they had negative numbers. But anyways, overall, minus 0.46%. Basically, when we're taking a look at that, we see that it was the first week in 4 that they saw negative returns, and they saw outflows. This time a very small outflow, though, only $417 million, but it's the 31st consecutive week that they've seen outflows. When we dig down a little bit deeper, again, as I was saying earlier at the top of this piece, domestic equity funds saw about $1.9 billion in outflow, 43rd consecutive week that they've seen outflows, and this time they only had a loss of about 0.30%. However, if we look at the non-domestic equity side, who, by the way, saw a 0.75% decline, we saw a $1.5 billion inflow. 3rd consecutive week we've seen that. And then breaking that down a little bit more, we see that the large cap funds on the domestic equity side were, once again, the pariah, $1.2 billion out, where international equity funds saw about $1.3 billion in. Let's go ahead and take a look at the ETF universe to see what happened in that area as well. For the 4th consecutive week, they've taken net new money in, this time to the tune of $5.1 billion. At the top of the group, we basically saw the iShares Russell 2000 taking about $807 million. Financial services sector Spider Fund took in about $557. And then on the very bottom, we saw the consumer discretionary select sector Spider Fund actually lose about $227 million, and the industrial select sector Spider Fund basically lost about $213 million. Not a lot to write home about there, but certainly ETFs were in favor, and again, putting the pedal to the metal, while the retail investors were again still huddling and, if you will, ducking for cover, giving kind of the volatility what we're seeing in the market. Not a lot of volatility, but just a lot of economic changes. Certainly good Q3 earnings, but people are still concerned. Let's go ahead and take a look at the taxable bond fund universe to see what happened in that universe. 6th consecutive week, they've taken in net new money, $1.5 billion this week. First week in 4, basically that they've actually had negative returns though. Again, negative 0.27%. And recall that I did say that we saw a pretty big jump in the 10-year Treasury, which unless spreads actually didn't do anything, which by the way, they didn't. There wasn't a big move in spreads. There still was some concern that there might be some push, if you will, from the yield. And we thought we might see some outflows, but again, about $1.5 billion in. Corporate investment grade debt funds took in the biggest chunk, about $2.5 billion. It's the 21st consecutive week they've seen money. And flexible portfolio funds took in about $82 million. 3rd consecutive week that they've seen that new money. Now, if we dig a little bit deeper there, we see corporate high yield funds were the big losers. Only $407 million were out of that coffer. And of course, because the times are pretty good, it wasn't too surprising to see that the government treasury bond fund macro group basically saw about $192 million in outflows. Let's take a look now at the fixed income ETF universe. We saw about $2.3 billion enter that group's coffers, and when we take a look at even deeper, we see it's the 16th consecutive week that they've taken in new money. At the top of the group, we saw the iShares iBox investment grade corporate debt fund, ETF that is, taking about $565 million, while the iShares 20+ Treasury bond ETF took in about $343 million. At the bottom of this barrel, though, iShares 3 to 7 Treasury bond ETF lost about 246 due to net outflows. Let's turn our attention now to the muni bond fund side. And this is where I told you this a little bit at the top of this segment that we had $111 million of net new money come into that group. It's the 2nd consecutive week they've seen inflows. However, what we note is that Waddell & Reed actually had, it's a monthly reporter, Waddell & Reed. Basically, they normally report on a month-by-month basis. They don't usually give us weekly data. But in the middle of the month, we saw Waddell & Reed actually, muni bond fund, suffer a redemption, but it wasn't truly a redemption. It was a merger into the Ivy funds. But we're recording it at this time because it's a midweek or a mid-month redemption or merger. We're recording about a $754 million outflow. So really it shouldn't be, because at the end of the month, Ivy will report that inflow and there will be an offset zero-sum game. So right now when I'm saying 111, really we should be talking about more like 880 or close to $900 million of a net new money coming into that group, and that's a big chunk actually for muni bond funds, so that was a pretty big move. When we take a deeper look, we see high yield funds basically were the big attractor of money, again ignoring this Waddell & Reed situation. $138 million, 2nd consecutive week they've taken inflows. And if we took a look at overall fund returns in the muni bond fund, it was actually down quite a bit, minus 0.37%. Let's go ahead now and turn our attention to money market funds. Not a lot of story there, by the way. 3rd consecutive week, though, they've seen inflows, $3.1 billion. Taxable money market funds took in $2.8 billion. And if we break that out, institutional investors actually added about $3.2 billion, while the retail investors actually took out about $400 million. And then on the tax exempt side, we saw that there was an outflow of about $341 million. Not a big story there. However, today and this afternoon, as we're looking at the trading going on in the market, we see that the NASDAQ is up big. I think it was up somewhere in the 2.5% or 2.4% range. Basically, what they saw was a big tech rally going on in there from, again, better than expected earnings from some big tech names. So we'll have to see how that pans out and how that influences flows next week. If I haven't done a deep enough dive for you and you wanted to do further research, you can go to our site at www.lipperusfundflows.com, or you can join us next week when one of our analysts will talk about flows of the week. Thanks for joining me. My name's Tom Roseen, wishing you the best in your wealth planning and creation.